Of all the things that we thought Paytm was going to make news about and have its stock get hammered, exiting small loans was not exactly on top of our minds, was it?
Well, actually, Krishna, this story has been on around for the last almost a week, 10 days or so. And in fact, our team, News 9, had in fact reached out to Paytm 197 Communication, seeking clarification from them that are you looking at exiting this small loan unhedged sort of category of personal loans, and there was a denial. But that story in fact got confirmed yesterday in the analyst call where Paytm went ahead and very clearly said
apart
that
from us, this was not in the top of mind of too many people out there.
Exactly. And yes, so as things stand right now, Paytm is looking at exiting the sub 50,000 rupee category of personal loans. A chunk of that, about 55 to 60% of that, was incidentally the buy now, pay later schemes. So easy access to money, easy access to go ahead and purchase goods in a BNPL sort of a scheme, and that scheme in any case has been attracting frowns from the Reserve Bank of India. And that's not the only thing which the Reserve Bank of India is unhappy about. RBI is also unhappy about the personal loan category per se,
right,
which by definition is collateral free and hence unhedged. So what did the RBI do? RBI went ahead and tightened the noose around these personal loans, asking banks to keep aside 25% more capital, risk weight as they call it, to address this ballooning challenge of personal loans. So now the fundamental question which is really bothering me is that at the time when we were discovering the story of Paytm exiting the small loan business, we have a competitor, another fintech, PhonePe, which was making plans to enter this very segment. And PhonePe, as you know, Krishna, has diversified its offerings where it's not just a simple payment platform anymore, UPI enabled payment platform and wallet platform. It is also an insurance player. And in addition to insurance, as part of its financial services diversification, it was looking at this personal loan category very seriously.
Right.
So I think the question that begs now is that, is PhonePe going to discard that strategic vision it had to get into that sector?
Right.
While we talk about Paytm really losing its core business, which was contributing as high as about 56% of its loan disbursement business.
Right. And in a sense, this is also a larger play when it comes to what's happening with this entire small loans business and the scrutiny over the small loans business, because you saw stories of harassment, stories of problems with this entire business not being run ethically, starting from the pandemic when people in need of cash and when these businesses flourished. And clearly now we are in the post-pandemic world. This entire ballooning of small loan businesses seems to be finding a place where it needs to go further, but it needs to go further with the right checks and balances.
Absolutely. So I think Paytm has also gone ahead and said, just to add to the story, that it will now focus on the over 50,000 rupee loans and securing those loans by way of some collateral. Right. So these are going to come with proper checks and balances, with the proper KYC intact, the credit rating of anybody that Paytm wants to lend out its money to. But to answer your question, I think loan recovery has been one of the most critical challenges which NBFCs have been struggling with. And RBI's whole concern, while tightening this noose around unsecured loans, was the very fact that what happens when these loans go bust, and what really happens when you find yourself stuck in a situation that you have lent out enough capital and there seems to be very little recovery by way of those loans ever coming back to the NBFC. Now, peculiarly with Paytm, another challenge was that Paytm itself was not an NBFC.
Right.
Paytm itself is not a non-banking financial corporation. So it's actually all this while been playing the role of a middleman. You have a customer base and you have your contracts with NBFCs. You get NBFCs, the customers are disbursed the loan actually from an NBFC through your platform.
Right.
So you actually stand right in the middle of pressure from both sides, because you have borrowed money from NBFCs and you have lent it in an unsecured manner to an unsecure customer. If this guy defaults, not just do you not get your own money back, you've got to pay this money at an interest rate to another player, which happens to be NBFCs. Right. So I think a timely decision from Paytm right now to look at the suspicion that RBI has now fanned a little more seriously and exit the business altogether.
Right, and also, Paytm as a stock losing over 20% in intraday on the 7th of December. Steepest decline in 2 years or so. Something to watch out for all those having positions in Paytm and this particular story.
But when markets closed, it had recovered a little bit. It was still down. It was down about 18% or so, but it has recovered since.
Right. It has recovered since, but it's been quite the hell of a day of trade for the Paytm stock. Paytm exiting the small loans business. At the same time, Kartik, before we just wrap up the story, I also wanted to put that buy now, pay later situation where you had a company like Zest Money, which is a buy now, pay later company, shut down recently. And we've seen that entire sector being in as much trouble as EdTech.
Absolutely, Krishna. And I think this was the very sector which saw its resurgence, or in fact, its birth during the pandemic. Now, Paytm, of course, has been existing much longer, but companies like Zest Money actually mushroomed only during the pandemic when jobs were hard to find, when salary cuts were rampant, and people needed easy access to some sort of monetary relief. And that is when companies like Zest Money really mushroomed, ballooned, and came to a point where they found a great market out there, an unserved market which was unable to get loans from banks, unable to do the paperwork and the credit ratings to get some sort of a loan from NBFCs, and found itself in a very, very happy position because it had money to lend. In the case of Zest Money, while there was borrowing, of course, from NBFCs and banks alike, there was also, enough capital available by way of investments into Zest Money itself, which it was perhaps risking lending out as unsecured loans to customers. And now I think Zest Money being one of the early sort of collateral damages of this RBI's frown on BNPL schemes. And that, of course, had gone ahead and lured enough and more customers to actually get access to that easy capital and burn it without really being credit worthy to pay that money back.
Right. So that's the story of Paytm exiting the small loans business, which we will be continuing to track because it's completely not out. As Kartik was talking about, 50,000 plus category, it still continues to remain invested in. We'll have to see how it goes.